Lately, it feels like every other headline is reporting yet another company adding crypto to its balance sheet. And the trend has expanded beyond Bitcoin to include other altcoins as well.
Digital shifted its entire treasury to Ethereum.
But are these companies making smart, long-term moves, or are they just trying to ride the crypto hype wave? Well, let's take a look at which cryptos companies are stocking up on, why, and whether you should care. So why are companies adding crypto to their treasuries in the first place? Sometimes it's about diversification or as a long-term hedge against inflation, especially Bitcoin or Ethereum. Others want exposure to what they view as a high-growth asset class. And for blockchain native or tech-forward businesses, it can align with their broader mission. But let's be honest, not every move is driven by strategy. As the mania phase develops, it probably becomes more and more about headlines. Crypto treasury news has a way of making stock prices pop, and companies know that. Okay, so let's start with the obvious. Bitcoin is still the top pick for most corporate treasuries. MicroStrategy, now going by Strategy, has become Bitcoin's loudest corporate supporter. They hold just over 600,000 Bitcoin built up over 5 years. That's a serious long-term bet, currently worth over 70 billion. Then there's Mara, formerly Marathon Digital. As a mining company, it makes sense for them to hold Bitcoin, and they're doing that by both mining and buying it. They've already built a treasury of over 50,000 Bitcoin and plan to expand their mining operations to keep that number climbing. A newer name on the list is 21, backed by Tether, Bitfinex, Cantor Fitzgerald, and SoftBank Group. They've already secured over 31,000 Bitcoin and plan to launch with 42,000. Even Trump Media and Technology Group has hinted at Bitcoin plans. After raising $2.5 billion from institutional investors, they signaled interest in purchasing Bitcoin, but details are vague. Still, it's no surprise given Trump's crypto-friendly messaging. And then there's GameStop. Yes, the meme stock icon. They updated their investment policy earlier this year to include Bitcoin, and soon after disclosed a purchase of 4,710 Bitcoin, framing it as part of a broader push to support general corporate purposes and strategic investments. Their stock did briefly spike in the initial announcement, though the momentum wasn't sustained for long. In fact, the purchase announcement in June coincided with a drop in their share price. Bitcoin may lead, but Ethereum has become increasingly popular lately. Ethereum's valuation against Bitcoin has taken an immense beating over the last 2 years and is finally showing signs of life. Aside from price exposure, Ethereum also has the appeal of staking rewards, smart contract functionality, and being a central role in DeFi and NFTs and Web3 in general. SharpLink Gaming is the most prominent example of a company accumulating ETH. The company has been all in on ETH since late May when Ethereum co-founder Joe Lubin joined their board. The announcement of a buying spree between June and July caused SharpLink's stock to jump nearly 29% in one day. They now hold 270,000 ETH, even more than the Ethereum Foundation. Bitmine is another. They appointed Fundstrat's Tom Lee as chairman and announced a $250 million private placement for ETH purchases. That single move sent their stock up 400%. Bitmine now has more than 500 million in ETH after the initial private placement and further purchases. Digital took things even further. The mining and staking firm sold all its Bitcoin and redirected the proceeds plus a fresh 173 million to accumulate over 100,000 ETH. It's a full pivot from Bitcoin to Ethereum. Meanwhile, blockchain infrastructure company BTCS recently raised 62.4 million to acquire more ETH, now holding over 70,000 ETH. Outside of Bitcoin and Ethereum, a few other tokens are starting to show up in corporate treasuries like XRP and Solana, which suggests they may be betting on the future of these networks. Trident Digital Tech Holdings plans to raise $500 million for a corporate XRP treasury. The company aims to hold XRP long-term and generate yield through staking. Weebus International is potentially building a 300 million XRP reserve and plans to integrate Ripple's payment technology into its operations. Hyperscale Data via Alt Capital Group is buying 10 million in XRP with plans to launch an XRP lending platform. Solana is drawing similar interest as well. Cypherpunk Holdings rebranded as Sol Strategies and went all in on Solana. The move came with a leadership shakeup as Leowald, former CEO of Valkyrie Investments, stepped in and took things in a new direction.
By us putting Solana on our balance sheet, but also being completely a Solana-driven technology company.
Since then, they've stacked over 420,000 Sol. But they're not just sitting on it, they're staking and running validators too, a clear sign that they're betting on Solana's future. Upexi, a consumer goods company, holds over 2 million Sol and plans to raise another 200 million to grow that position. They also want to tokenize their shares to allow 24/7 trading. It's a bold play that leans into Solana's on-chain promise. Now, beyond the majors, cryptos like TRX, BNB, and AI-related tokens like FET and Tau, and even Doge are also getting picked up by companies, probably even more by the time that you're watching this video. Some companies aren't just buying tokens, but transforming entirely, often doing it fast through mergers and blank check firms. Blank check companies, or SPACs, are shell entities created to take private companies public quickly. In the crypto world, they're now being used to acquire digital asset holdings at scale. Anthony Pompliano's ProCap Financial is going public by merging with blank check firm Columbus Circle Capital Corp. With 750 million already raised, ProCap plans to hold up to 1 billion in Bitcoin and build a crypto-powered financial platform around it. Other cases are a bit more layered. Both Sonnet Biotherapeutics and Inovia have taken bold turns into the crypto space, each building sizable treasuries of hype tokens as part of broader rebrands. Sonnet is merging with a newly formed firm called Rorschach and will rebrand to Hyperliquid Strategies. The merger is backed by big names like Paradigm, Pantera, and D1 Capital. They're already committing to hold over 12 million hype tokens in their treasury. Inovia, now known as Hyperion DeFi, made its move after a debt restructuring deal with Avenue Capital Group. That agreement extended its debt timeline and made Avenue the company's largest common stockholder. Since then, Hyperion has accumulated more than 1.4 million hype tokens. Now, just to be clear, the point isn't that every move is just for show. Some companies are taking bold, strategic steps with crypto or blockchain exposure, while others are simply chasing hype. Just note that companies can also make risky plays, and just because you hear a company buying some token, it doesn't mean that you should too. Let us know down in the comments if you think crypto treasuries are the future of finance or just clever PR. If you enjoyed this video, don't forget to hit the thumbs up and subscribe to stay updated with everything crypto.